Interest rates definitely dominating the real estate world.
Yeah, they mean a lot these days. So what does it mean, though, for you buyers and sellers? This morning, Jon Bye joining us back here again this morning to talk about this, that, and the other thing. Thanks for coming back, John. What do the Fed rates mean right now? What do they look like? Because they are still pretty historically low, right?
Rates are still super low, and with the Fed slashing rates, there's nothing bad that can come from the real estate market with that, I think, when it comes to interest rates. It's definitely trending. It doesn't have a direct correlation, though. So when you think about you're shopping for a 30-year fixed mortgage rate, it's not like instantly they were slashed down.
Right. So when you hear that the federal interest rate has gone up or down, it takes a time to trickle down to the mortgage rate.
Yeah, and it's more so how that then overall affects the lending aspects in the stock market, and you see that going up and down and just all over the place these days. So the trend is still going lower, and I think it's probably going to continue to go that direction a little bit, but more than likely lower versus higher, which is great.
Does that affect the buyer or the seller more?
Well, it can affect both, right?
Okay.
So if you look at it from a buyer's perspective, the lower the rates, the more affordability. And if you look at it from a seller's aspect, the more affordable homes, even if with their price point, the more people that can qualify for it, the better opportunities it is to sell. So I think it's a win-win for everybody. The biggest thing is just keep people buying, keep people selling, moving up, moving down, all over. It's great for our real estate market.
All right, let's talk about some new numbers you got this morning, John. Taking a look at actual median price right now. We got King, Snohomish, and Pierce County. King County, one of the things that catches my eye, I don't know about you, no change.
No change.
When have we seen that?
Yeah, exactly. So we look at this, we've been checking it out every single month, and we've seen King County at a deficit, really, when we've been looking at these year-over-year numbers. One thing, too, is that we're looking at, we always look at absorption rate, and that hasn't moved a whole lot. So I think that we're seeing some stability. You know, I think there is a huge jump from like 168 in King County for absorption rate last year, all the way down to like 42%.
Wow. What does that mean for people who are like, I want to get a new house, I want to upgrade finally? What does that mean for those folks?
Options. Yeah, that's really what it boils down to. Options, contingent offers are getting accepted. The win-win scenario in real estate now is more than I've seen in years and years. It's definitely much more balanced. Everybody's happy at the end.
Unless, though, you want to get into a bigger house, right? I mean, if with the no change, is that going to help with the more inventory? Is that going to help bring prices down a little bit? You'd think so. More supply?
A little bit. I think at a certain point, though, now it's affordability, so people can get back into the game. Now it starts leveling off. What we're seeing now, with rates going down, affordability goes up. That means people can afford more homes. Their auto loans are going down. Everything else with the Fed cuts going down. So that helps with affordability.
The other thing that people look at is how long a house has been on the market. So it kind of gives you an indication of what the housing market's like, right? So let's take a look at the average days on the market in July for a home that's under $500,000. What are we looking at?
Yep, so King, we're looking at 22 days, Snohomish at 17, and Pierce at 18.
What does that mean?
That means it's still quick. If you're priced right, you don't want to sit on your hands. You know, the biggest thing is that you still want to act when something that you like is going to be available. Because more than likely when you go out and tour, you're probably not going to see 10 homes that are perfect for you. You're probably going to look at 10 and maybe 2 are great, and the ones that are great are usually priced right and in good condition and are still going to sell very quickly.
And not surprisingly, homes over $500,000 sit on the market longer, right?
A little bit longer. But still, though, when you look at under your 29, 29, and 35 for your days on market.
So about a month.
All reality.
Is that good?
That's great.
Really?
When you think about it, that's still only marketing your home for a month.
Yeah.
It's not a long time.
It's like the old days, you know?
In the whole grand scheme of things, you know, other parts of the country, you're talking 4 months, 6 months, 8 months.
Okay.
We have a jaded view of a real estate market. We are incredibly fortunate.
We're kind of spoiled.
We are very spoiled. So we always have to take that into account.
Yeah, and that's why we have you. Help make some sense of all of it. Jon Bye, thanks for being here with John L. Scott.